All right, let's talk about insurance. It's a lot, y'all. It's a lot. Hey y'all, welcome to Ginger Walkabout. We are here to talk about insurance if you are renting out your RV. Bear with me. It is just going to be one long video of me talking head at you, but it is what it is. Okay, so a few caveats before we get started. I am not an insurance agent. I am not a broker. I have no licensing, no certifications, no knowledge, no nothing, except what I've read and learned from talking to people who are agents and brokers and whatnot. So you take what I say with a grain of salt. I do my best to be accurate. Your mileage may vary. Everything is based on my location here in Texas. As you know, insurance is state-based. Every state has its own requirements and minimums and whatnot. So again, your mileage may vary depending on where you live. This is my situation and my premiums and my rates and coverages. So when you're renting out the van, obviously there's two specific insurance requirements, right? So you have your policy, which is on the vehicle, that covers you while you're using it or it's garaged or whatever. Like it's just your regular policy that you would have on your vehicle no matter what you owned, right? And then there's the policy and the coverage that the renter needs, okay? So your policy does not cover them because they're not a relative and because you're getting paid. Your policy does not cover them. So they have to have separate insurance, whether that is purchased through a website like Outdoorsy or RV Share, whether that is purchased as a separate rider on your policy, or whether that is some cases their personal auto policy would cover their renting of your vehicle. So those are the three options for the renter. For the purposes of this video, we are talking about what you need yourself, what I need for a policy on Lucille the van. Something we should also note before we get started, these are vehicle policies, okay? These cover you in case of an accident, of a wreck, whether you are at fault or not at fault. It covers your liability, it covers injury of other people, it covers damage of other people's property, and it covers you if you get in an accident with someone who doesn't have insurance or doesn't have enough insurance. Then your policy will step in to help cover the cost of your vehicle. And also in case of a total loss, your vehicle is completely destroyed, then, what they will pay you in order to replace your vehicle. And obviously all these coverages have deductibles associated with them, just like all insurance. Also, we're talking about a drivable motorhome. We are not talking about a towable. It's a whole different ball game for towables. Okay, so this is just for a drivable RV like mine. Cool. Okay, so there's basically two ways to go if you are going to rent out your RV. There is what I will call a personal policy, which is just like you normally have on your RV or your other vehicles. And then there's a commercial policy. Which is more traditionally for if you were using a vehicle in a business setting, in a commercial situation, or if you had like a fleet of RVs or rental vehicles, but you can get them even if you just have one. So those are the sort of the two ways to go. So let's talk about the personal policy first. The main thing to know is most insurance companies will not cover your personal policy if you rent out the van. They will drop you if they find out. They could, I suppose, potentially deny a claim if they found out you were renting the vehicle out. So I'm currently with Progressive. I have been since I've owned the RV. I do not have a full-timer policy. I dropped that down when I stopped being full-time. So I just have a regular RV policy. And so here's an interesting factoid. So I wanted to be able to point you guys to the exact language in the Progressive contract that said you cannot rent out your vehicle. So I read my policy a few times and I couldn't find it. It says very specifically in the policy that this policy does not apply while the rig is rented out. In other words, while Joe Blow is touring around in your rig that he rented from you, it's not covered. And I get that, right? Like we said, renter has to have their own policy. But the Progressive policy said it doesn't cover it while it's rented out. Okay, so where does it say I can't rent it ever under any circumstances and keep this policy, right? I get that Joe Blow has to have his own policy, but why wouldn't my policy still work? So I called Progressive and 30 minutes on the phone with Progressive, back and forth to find out at the end of the day, it's not in there. It's not written in the contract anywhere. Because every time she'd come back to me with well, it's because of this. Well, it's because it's a commercial use now. If you rent it out, it's a commercial use. And you need a commercial policy. I'm like, okay, great. Where does it say that? It's not in there. So it's the dumbest thing I've ever heard of, basically. It's not written in the contract, but according to Progressive, if we were to sue you, it's common knowledge and the lawyers and the blah, 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 but it's not actually in the contract, which I don't know how you can enforce something that's not written in the contract, but whatever. Progressive may be in the process of dropping me right now just because I made that phone call, but it is what it is. So just a little aside for you, wacky information. Check with your broker or your insurance company. See if you can get different information than I did, but that was Progressive's answer. Okay, back to business. So I did find 2 companies that write regular auto, personal RV policies that will not drop you if you rent out the vehicle part-time. Those are Safeco and Foremost. So the Safeco policy, I got a quote on, I went through Roamly. Roamly is the insurance company associated with Outdoorsy. Roamly is not, they don't write the policies, they are a broker. So they can get you a policy with Safeco or Foremost. So they got me a quote from Safeco, and then a friend of mine got me a quote from Foremost. So those are the 2 that we're looking at. All the coverage is the same between my current Progressive policy, Safeco, and Foremost. So that would be liability is injury is $50,000 per person, $100,000 per accident. Property damage is $25,000 per accident. It's the same for uninsured, underinsured motorists. So when you get an insurance quote, that's what you look at. So it's basically what we'll call $50,000, $100,000, $25,000. Those are the limits on your liabilities. Then the collision and comprehensive, for all 3 of these policies, it's actual cash value replacement is what they do. Some of them base that on your purchase price, less depreciation. Some of them base it on the purchase of a new year model vehicle. Anyway, you just kind of got to read your policy to know. But that's going to come with a deductible. And so that's the number to look at really to know, to compare policies. So right now with Progressive, I'm sitting at, comprehensive and collision deductible of $375. And then the other 2 policies are higher than that. So we'll get to that. So my current Progressive policy, with those parameters, is costing me $1,320 per year. I pay on a month-to-month basis. Yeah, there's some discounts in there for like multi-car and blah, blah, blah. But bottom line, I'm coming out at about $110 a month. That's where I'm at right now. So then the Safeco quote I got with all the same parameters except for The deductible, which jumps up to $500 for collision and comprehensive, that's going to come in annually at $2,688. Monthly is about $224. So that basically is doubling what I'm paying now. So they're out. Safeco's out. Then the Foremost quote. So Foremost, all the same parameters. Now their comprehensive collision deductible jumps up to $1,000. Now, I would say if I total the rig, then it's totaled, and coming up with $1,000 to get replace $100,000 vehicle, I can live with that. So their premium comes in at $2,066 per year, which breaks out to about $173 a month. So yeah, I mean, that's going to go up about $900 a year over my current Progressive policy with basically the same coverage. The only difference being they won't drop me if they find out I'm renting the van. Okay, so now let's talk commercial policies, because that's probably the area that's going to be a little different to all of us, right? Certainly was to me. So I didn't, so MBA and Triad are the two companies that write these kind of RV rental policies, commercial policies. I did not get into Triad. Triad is more for like a fleet, and they have, you have to take a test and there's things. So I did not get into that. So MBA is my commercial policy option. So, and I believe MBA actually writes the policies for RV share renters as well. Just FYI. Okay, so here's how the MBA policy works. It's different from your regular personal RV policy. So MBA writes two policies for the RV owner, okay? They write the regular auto policy, right? Which is similar to what you have on your RV regularly, the personal policy. But they write it at the state minimum, okay? And that's your only option. You can't get any higher. It's at the state minimum, period, end of story. In the state of Texas, that is liability for injury is $30,000 for each person, $60,000 per accident, and property is $25,000. And that is also for the uninsured, underinsured motorist. So that right there that's the policy, period. Now you might be thinking, oh my God, that's not enough liability coverage. Yeah. They write a second policy that's all part of the package. And that second policy is $1 million liability policy. So if you driving your rig get in a wreck that is your fault and you get sued, and you go blow through that 30/60 portion of the first policy, then the $1 million liability policy kicks in. Okay. So essentially you are covered up to $1 million. Which, as a person who is essentially having a small business and renting out your rig, is a good thing, right? More liability. What if the renter came back and said, well, it was because something was wrong with the tires, that kind of thing. So that policy can kick in depending on certain parameters, okay? So then you have your comprehensive and collision. And that is where, if you total your rig, you're going to, get reimbursed for it, or wreck your rig, you're going to get reimbursed for it. There, the deductible, that goes back to the actual cash value for replacement. Now with MBA, you tell them what your rig is worth. So for me, I set it at $95,000. Every year your rig goes down in value with depreciation. You can call them up and be like, my rig's worth less, and they will calculate it and lower your premium based on what you say your rig is worth. The deductible definitely goes up with a commercial policy. So when I got the first quote from MBA, it came back with a $2,500 deductible for collision and comprehensive. And I was like, damn. I mean, I'm sitting at $375 with Progressive, and you want me to go up to a $2,500 deductible? That's a lot. Here's an important point, kids. If you learn nothing else from this video, learn this. If you have a lien on your vehicle, go look at your purchase contract. Most of them have a requirement for insurance, okay? And specifically an insurance deductible. They have a limit on how high the deductible can be on the insurance. So in my case, it was the greater of, I think 2% or I think $1,000. So the 2% would be more. Anyway, so I sent that information to MBA, and the woman I was working with went back to the underwriters, and the underwriters came back with a $1,500 deductible to meet the requirements of the lien holder. And so that put the premium up a little bit, really not much, a few bucks, like not a lot. And it got that deductible down by $1,000. So that is an important fact for whatever kind of insurance you're looking at, personal policy, commercial policy, whatever. Make sure you know what the requirements of your lien holder are in your purchase contract, because that will affect your insurance quotes. So very important. Okay, so the MBA quote came back with the regular auto policy and the $1 million liability and the $1,500 deductible. It came back at $2,352 a year, about $196 a month. So now that's obviously, it's about $300 more than the foremost quote, which is the front runner on the just regular auto personal policies I'm looking at. Okay, so MBA does require a deposit per vehicle that you put on the policy. In my case, it's about $400. You get that money back when you cancel the policy, but just be aware it's an added upfront cost. Okay, so why would I go with MBA over foremost for coverage? What are the upsides of a commercial policy? So a couple things. One is that with a commercial policy, renters can go and get a rider on my policy. Okay, so they can go to the MBA website with some information I give them on my policy, and for basically $40 a day, they can get their own liability and collision policy on the vehicle. So that they're covered when they're renting, which means you don't have to rent through an RV share or an outdoorsy. You can do it directly to people. So that gives you some more freedom and flexibility with how you're renting. And if you're renting direct to people, obviously you're keeping all of the money. You're not giving a cut to outdoorsy or RV share, which is usually about 25%. We'll get into that in a later video, but so that's an option. You still can require renters to go through RV Share or Outdoorsy and buy insurance through them. So your MBA commercial policy still covers you, no problem. And they can go get insurance through one of those platforms, or they can get it directly through MBA as a rider on your policy. So you got the flexibility. Here's the big game changer, though, as far as I'm concerned with MBA. They have what they call a winter situation, okay? So if you opt to not rent your vehicle out at any point from October through April, so for those 7 months of the year, if you're not going to be renting your rig out, because it's slow and nobody rents during those months, and so, you don't need it, then you can put it on winter rate with MBA, and it drops your premium, your monthly premium, about 60%. So in my case, it would be probably under $80 a month while it was on that winter situation. Now, if I put it on in October and in January, somebody wants to rent the rig for a week, gonna go down to Big Bend. Well, I can take it off of the winter special and just put it back on the regular premium for the month of January, and off the renter goes. Then I can put it back on the winter thing come February, and I'm back to the lower premium. I can still use the van while it's on the winter special. I can go off and camp in it. I can go to Big Bend, all the things. You can't rent it to somebody. Nobody can get a rider on your policy. You're not renting it out. Just so we're looking at numbers correctly, if, let's say, I decided not to rent it for that entire 7 months, okay, and then the rest of the year pay the regular premium, that policy now drops down to about $1,540 a year, which is only a couple $100 more than my current Progressive policy. Again, more options, more flexibility, and you can lower your premiums when you're not renting out the rig. That seems pretty good to me, right? So that's an important option to keep in mind. Okay, so I need y'all's opinion. What would you do between the two policies? Foremost, regular RV insurance policy, and MBA commercial policy. Foremost is going to run $2,066 per year. And it has the regular liability limits and all that. One thing it does have is $20,000 in personal effects coverage that you cannot get on the commercial policy. So if, the rig got damaged or stolen and my computer was in there and dishes and all the mods and all the things, whatever they consider personal property, not part of the rig, then the Foremost policy would cover it. The MBA policy would not. Okay. So Foremost, $2,066 per year, with the personal effects coverage, with $1,000 deductible on collision and comprehensive, versus the MBA policy with the $1 million liability, the $1,500 deductible on collision, comprehensive, no personal effects, and it will run anywhere between $2,352 a year and $1,540 a year, depending on how many months I put on the winter special. Those are my two options. I'm leaning towards the MBA, but you guys let me know your thoughts. What would you do? How would you handle this? Down below. Need your help. Okay, so that's it. That's what I've learned about insurance, y'all. It's a lot, and it's something you definitely need to think through before you rent out your rig. Yes, Lucille is currently listed for rent on Outdoorsy and RV Share. I have not changed the insurance yet because I haven't actually rented it out, and I haven't been served with notice by Progressive that they're dropping me. And so I'm not concerned about it yet until I actually get a reservation. So let me know what you think. Let me know if anything I said confused you didn't understand, and I'll clarify. Give me your feedback, and I will let you know what I end up deciding. And then I will see you on the road.